Mansfield today at the beginning of a brand new week, and as usual we take a look at business to start the week off, courtesy of Capital Legacy, your number one provider of wills and estate administration. And as usual we're joined by business journalist Chris Gibbons. Chris, what's coming up this week that we can look forward to?
Good morning, Jeremy. Well, we have a very big week ahead of us, and it's off, I'm afraid, to a very shaky start. The key factor, at least a dozen central banks worldwide meet to decide on interest rates, including our own Reserve Bank. The big one happens on Wednesday in Washington, when the US Fed announces its latest position on interest rates. And now, given the size of the US economy compared to the rest of us, it's always a very closely watched number. Right now, it's being watched with microscopic attention to detail. Will we get a further clue about the Fed's intentions with regards to tapering? Tapering, of course, the decision to scale back on the massive bond buying program introduced to help deal with the massive impact of the COVID pandemic.
There seems to be plenty of nervousness around at the moment.
I think that's right. US stock markets down in the last few days, off their record highs. The Dow, the S&P 500, both 2% down on the start of the month. It's also an indicator, I think, the fund managers are expecting the bond buying program announcement to come sooner rather than later. The easy money tap gets turned off. As I've said, our own Reserve Bank meets this week. Their decision on interest rates here comes out on Thursday. The expectation is for no change. But compounding that fear factor, it's crunch time for a huge Chinese property developer called Evergrande, which owes $300 billion US. And it's due to make a big payment on Thursday. Now, will it happen or won't it? Well, the likelihood is it won't, and that would send shockwaves through the rest of the market. And as a result, Hong Kong down over 4% this morning. Hong Kong now at an 11-month low. Worries that Beijing will extend its crackdown on tech shares into the property sector. Also well down, another big Chinese investor in real estate, Ping An Insurance. Ping An, which our own Discovery has a significant stake in. Discovery's already scrapped its dividend and flagged a possible rights issue because of Ping An.
Chris, what's your view? Do you reckon the US Fed is going to start to taper or won't they? I mean, what are the markets telling us here?
Jeremy, key to all of this are the yields on US government bonds, the so-called T-bills. I don't want to bore you with too much technicality, but suffice it to say the dollar has been rising against the euro. It's now 117 compared with 123 at the start of the year. Firmer dollar indicating demand, which in turn indicates investors are positioning themselves for lower bond yields and higher interest rates. So to answer your question, yes, I think we will get some more clarity from the Fed. But no, I don't think the end of the program will be announced quite yet. Too much COVID in the US, still too many unemployed Americans, I think, and too many worries about whether or not the global economy really is in recovery mode. For the markets to be unsettled. One other point to consider, in the middle of all of this, US President Joe Biden is deciding on whether or not to give the Fed chair, Jay Powell, another term in office. That's a decision that is imminent. So for Powell, who definitely does want to stay on, caution is the watchword. If he moves too far, too fast, he'll find himself out of a job.
How does that affect us all here in South Africa, Chris?
Well, again, broadly speaking, if interest rates are going to rise in the US, Jeremy, those investors looking for better yields by heading into emerging markets like ours will shift their investments, or at least some of them, back home. Therefore, emerging markets will move softer. That has certainly happened here, although I think there are a couple of other factors at play as well. JSE All Share now down nearly 7% since the start of September. Top 40 down over 7% this month alone. So that's certainly an indicator that more money is flowing out than is flowing in. We've also seen a softening of resource prices. That's a factor. But I think the really big one here has been the steep drop in the price of the two market heavyweights, Naspers and Prosus. Nothing there at all to do with the US or bond yields or anything like that. Everything to do with the pressure on Chinese internet giant Tencent. That's from the Chinese government. Year to date, we were up, the last time we looked at these numbers, about 13% on the year to date. A couple of months back. It's now a paltry 5.5% nominal. Add in some inflation around 4.5%, and we're what, up 1%, 1.5%, not very impressive. Compare it to the S&P 500 in the US with inflation there running at 1%, S&P 500 up 18% year to date.
Wow. A couple of very interesting headlines last week, Chris, including a possible lifeline for Eskom.
Interesting indeed, Jeremy. It's a story from Bloomberg News, which says envoys from the four of the world's richest nations could be in South Africa in the very near future. And they're looking to do a deal with Eskom to help it with the funding necessary to close all those coal-burning power stations, 15 of them in total. You'll be aware, of course, that South Africa is the 12th biggest emitter of greenhouse gases in the world. Eskom accounts for 42% of that. All well and good, but how do you wean a nation off coal-fired power when its biggest utility owes 400 billion rand in debt, has a workforce dependent on coal, dependent on those power stations, the mines that supply them? There's no way that on its own Eskom could possibly afford the switch to green energy, let alone the cost of reskilling all those workers, the so-called just transition. So add the fact that most banks, the big local ones anyway, are refusing to lend money for new coal-fired power stations or coal mines, and you have a dilemma. But what is out there is tens of billions of dollars in green money looking for investments. And on the face of it, suddenly you have a marriage that looks made in heaven. Delegates from the US, UK, France, and Germany ride to the rescue, and they use some of that money to help Eskom achieve its aims. And then they can ride off into the sunset to the big climate conference, COP26 in Glasgow in Scotland at the end of next month. The heroes will tell all their friends how down in South Africa they're helping save the planet. They will live happily ever after.
Sounds a little bit too good to be true. There's got to be a catch here somewhere, Chris.
Ain't that always the case? The bad guy in this little tale is the National Electricity Regulator, which determines what price Eskom may charge for the electricity which it is selling. Eskom CEO Andre de Ruyter has long held that NERSA refuses to allow the utility to sell power at a price that would allow it to recoup what it is spending. Now, given the ANC government's socialist pretensions, I don't think that is going to change anytime soon. But as any person in business will tell you, it doesn't matter what kind of electricity you're selling, whether it's coal-fired or green-fired or whatever, if you're not selling at a price above your costs, you're going to have a long-term problem. You'll either require a bailout from someone somewhere, usually the taxpayer, or you just go out of business. And so the circle begins to turn all over again.
Another story here with an upside. Chris, local government cuts a below-inflation wage deal.
Yeah, 3.5%, Jeremy. SALGA, a local government association which negotiates on government's behalf, has done reasonably well, I think. It's not the 0%, which National Treasury says we need, but it is a long way beneath the 7s, 9s, and 15% unions have been demanding. It adds, I think, some credibility to the intention to cut the state's wage bill.
Some good news for a change coming out of the travel sector. SAA opening up to certain destinations this week. And over the weekend, I saw a report saying that their loads are looking pretty good for those new destinations. Also had a word with Brett Hoppy, the general manager of the Sun City Resort, who said this coming long weekend, they're actually absolutely jam-packed, which is good news for the tourism industry, I think. But results out last week as well from Growth Point would indicate that the tourism industry is still hemorrhaging at this stage.
Well, it certainly has been, Jeremy, but I think the observations you've just made indicate that when it turns, it's going to turn very quickly indeed. We're going with my son and grandchildren to Mauritius just before Christmas. We had to finalize our booking last week or miss out completely. The flights are chock-a-block out of South Africa to Mauritius, so plenty of demand out there. But yes, Growth Point, the country's biggest landlord, jewel in its crown, the V&A waterfront in Cape Town, revenue from the waterfront down nearly 40% last year, according to Growth Point. Number of visitors down from 24 million pre-pandemic to just 13, 14, just under 14 million, checking my figure there. And as a result, says Growth Point, it continues to provide rental support to a large number of tenants. In fact, you don't have to read the numbers. You just have to take a walk around the waterfront and look at all those closed restaurants, all those upmarket eateries like Balducci's. They're just no longer there. Now, some of those were paying upwards of R1 million a month in rent. R1 million per month to Growth Point. And that's why the UK's decision at the end of last week to keep South Africa on the red list is such a blow, because the UK is our #1 source market for tourists. And as long as they stay away, tourism will continue to get hammered. So please, Boris Johnson in number 10 Downing Street, when you have a moment, could you just explain to me the difference between a double vaccinated South African and somebody from Turkey, Bangladesh, Pakistan, or Kenya, all of whom are now allowed into the UK, while we, vaccinated, we are not. There's a horrible mismatch going on there, in my humble opinion. In fact, I'm coming to you from Munich in Germany this morning, Jeremy, and the Germans get it. If you're vaccinated and can prove it, you are very welcome here in Munich.
Yeah, if you can afford the Stein or Pilsner that you're buying on euros, I would imagine. On that note, while you're in Germany, how are things in Germany economically?
Sure, I think like the rest of us, taking a bit of strain, Saturday, the day after we arrived here, 2 days ago, was supposed to be the first day of the massive annual Oktoberfest. Oktoberfest attracted 6.3 million visitors over the 3-week period, the 2 years prior to the pandemic, 2018, 2019, 6.3 million visitors. Imagine what that does for your local economy and then take it away suddenly, cancelled. It's a massive blow. But the pandemic here does seem to be under control. So the locals came out on Saturday in their thousands, probably tens of thousands, to celebrate the first day of the festival, their first day being allowed out without masks. And they were also determined to do their little bit for all the taverns and the pubs and the restaurants. And from what we observed, they were hard at work doing it. From as early as 11 in the morning, I could see the beers and the schnapps being poured down thirsty throats. And when we retired from the field at about 6 in the evening, they were still going plenty strong.
Well, as a representative of Mansfield today, when you say when we retired from the field, I hope it wasn't retired hurt, Christopher.
Well, I wouldn't exactly say that, Jeremy, but I would have to acknowledge that my ability to spend hour after hour in the hot sun, surrounded by men wearing funny leather shorts, isn't quite what it used to be.
They've got a big weekend coming up this weekend as well in Germany because they're going to the polls, and it's a very important election, this one, isn't it?
It is, Jeremy, absolutely. It will decide who takes over as Chancellor from Angela Merkel, who's been in the job for 16 years. Slight favourite at the moment, left of centre Olaf Scholz. Scholz currently right of centre Merkel's deputy and Germany's finance minister. Of course, German politics is usually all about coalitions. What effect, if any, will all of this have on us in South Africa? Well, probably very little. There's an old saying in German politics that it doesn't matter which party wins the election, the car industry always gets in. So with BMW in Pretoria, Mercedes-Benz in East London, and VW in Uitenhage, I'd say very definitely they'll get my vote.
Good man. You still going to be in Germany next week?
Oh yeah, absolutely.
Okay, we'll chat to you from there. Nächste Woche sprechen uns wieder mit Herr Gibbons aus Deutschland. Right here on Mansfield Today. Thank you for joining us. It's been a pleasure having you with us, courtesy of Capital Legacy, your #1 provider of wills and estate administration. Until next time, bye-bye.